What's up, everyone? Welcome back to the Randi Hipper Show. I'm your host. Today, we're going to talk about another amazing use case for blockchain technology. If you guys are ready for the education, make sure you smash the like, subscribe, and share the stream out with friends. Today, I am joined by Dom with Alvara, and thank you for partnering with me for this interview. I'm so excited to talk to you today. How are you doing? You're currently at ETH Denver, right?
I am, yes. Another interview out of a hotel room, but I think we've got the lighting sus. That mirror at the back, I think, is helping us out. But yeah, great to be here. Thanks for having me.
Definitely. We were just talking about that conference mindset and just kind of getting after your work. And you guys are really grinding at Alvara. But before we get to what you're currently doing, I want to learn a little bit more about you. So, Dom, back when you were in college, what were you really interested in? Were you a tech guy back then, or were you just kind of figuring out life?
Well, it depends on because I know that college in the UK we call college university, and then our college is, I think it's your high school, like, but you're 16 to like 18. So I think that's your high school is our college, and then we have
Oh,
university as the equivalent. So that's the way that we call it. So it's always quite confusing for us. I actually so in between my college and university, so in between high school and college for you, was when I found my first job in traditional finance, which was as a junior stockbroker doing 250 cold calls a day in sales, getting clients, passing them up to the traders. And I did really well at that. And I actually turned down my offer to go to university or US college and went full straight into derivatives trading. And I ended up running the trading desk there after a few years, and then moved from there to St. James's Place Wealth Management, which is a FTSE 100 top 100 companies publicly listed in the UK as associate partner. And then after that, I joined traditional venture capital. So I actually never went to college, and I never did any tech either. So it was all very finance. And so yeah, it's I'm in the phi part of DeFi. I've got the experience rather than the D.
I kind of really enjoy that. You kind of went a different path, but still succeeded in a field where people think you have to be highly educated and pay hundreds of thousands of dollars just to go get that education to get to where you were. Why did you choose to go into finance to begin with? What kind of drew your mind to all the numbers and the market in general?
So yeah, it was mainly just it was just the fast pace of it. I'd need to my brain has to be like stimulated. So even like as a kid, I was always it's not so crazy here like US and Canada because you guys do it a lot, but I played ice hockey, which is crazy in the UK. No one plays ice hockey in the UK. Like
Really?
there's about like it's the point where cities have to share ice rinks because there's just not enough. And like
Oh,
we had to do our training at like 11:15 p.m. at night because you that's how unprofitable ice hockey is in the UK. So they don't actually let you use the ice because they have like all of the like discos that is more profitable in the UK than actually playing the sport. So we get pushed to that end. So I was a goalkeeper as well. So like as as stimulated and dangerous the environment as you can get. So that's what drew me in really was just fast pace of it. And it's a very it was commission only. So like it's a
it's a grind
kill on
job.
kill world. And yeah, it's that just always sort of had. I mean, there's some benefits to. I'm so happy I went the way that I did, in the fact that I jumped straight in. But and one of the things that we've tried to solve at Alvara, even after getting 10 years of experience in finance as a senior derivatives trader, associate partner at FTSE 100 company, and in venture capital, if I applied for Morgan Stanley, JP Morgan, or Goldman Sachs, I could never even get to an interview because as soon as I tick the box of not having a degree, my CV is filtered out. They would
It's a
never even get past that stage, even though they would hire someone with a piece of paper that said they drank beer for 3 years over someone with 10 years of experience in traditional finance because of literally just because of this system of
yes.
education meaning talent, which if you look at like most billionaires, they are the neurodivergent type, and a lot of them are school dropouts because they have that sort of divergent ideas and way of thinking, which makes them go and do something different. So yeah, it's we're trying to solve that at Alvara by completely decentralizing and democratizing access to funds and asset management.
Would you say that's the biggest problem in traditional finance is the barrier to entry to actually do something, like whether that's investing, being an accredited investor, or just having that simple piece of paper? Like you said, you could have been a complete degen for 3 years in college, but have that piece of paper and you're considered more educated and valid than someone like you that really went after it and got on the field experience with their job.
Yeah, I definitely say there's a degree of one thing that I noticed that was a consistent theme throughout all of my traditional finance roles, whether it was derivatives, wealth management, or venture capital, is there's always, and it's even split like two sides of the office. And a lot of people who didn't go to like private school, which is in like paid education all throughout even high school or others, will tell you that in traditional finance office, you have two general splits. You have, especially in my commission-only stockbroker role, you had one side of the office that was generally working class, going into sales, proper grinding, proper putting in the effort, because they needed to actually make money in order to survive. And then you had the other half of the office that were from a very affluent background, didn't need to make sales to survive. They could survive on commission only because they were living off mom and dad's paychecks. And so they could afford to just sit in this environment, which was like a boys' club that they all loved. And you didn't have any in between. So you have this like nepotism, you have this like class divide. I'd say the biggest lack of equality in finance isn't gender, it's not race, it's class. Absolutely. Like, speak to anyone from a non-privileged background in finance, it's definitely a class system that's the real differentiator.
It's really the haves and the have-nots, unfortunately. And that it's so funny how you say that, because we see that all the time with traditional finance, but you kind of experienced it in like this personal scale of just an office that represents almost the world. So I think that pretty much aligns a lot with like what people are experiencing with like the 1%. We always talk about the 1% and how we want to actually even that playing field. And bringing you into like kind of crypto from traditional finance, what was that like? What drew you into cryptocurrency? How did you hear about it?
So I think the first crypto I bought was, well, it was through, because I'm in a lot of trading groups because I was a trader. And so, with traders, it's not necessarily about the sector. It's just what
What makes
will make
money?
money. Yeah.
Yeah.
So people started buying in, and I was hearing about it obviously like 2017, and I always thought too late, too late, too late. And then,
Nope.
well, I say luckily, it depends on when I first heard about it. But I bought XRP as my first crypto on eToro of all platforms,
Ooh.
and that was maybe about 55 cents on the dip. But I swear to God, it's a stable coin. It's literally there now.
Still the same price. It's
Yeah, it's like,
hilarious.
I think it's like 60. But yeah, it's barely moved. But that was the first one. Then I sort of averaged in, and then I picked up all of the dinosaur ones that were popular, like Stella. Actually, I don't want to say Cardano, but Cardano, because it's, hasn't quite had its comeback yet. Neo, that's a classic. What other ones are there?
What about
Like,
Litecoin?
which one?
Litecoin?
Oh yeah, Litecoin. Yeah, I didn't want to put Litecoin and Cardano into that same bracket as like Neo and Stellar,
Yeah.
but it's like the
It's an
that
OG.
2017 OG crowd. Yeah, Bitcoin Cash for my sins.
No, you had all of them. It was just I think that's kind of like the 2017 crypto starter pack. Those memes with
Yeah.
like the starter packs, like that fits it exactly. So like 2017, I think was just overwhelming for a lot of people because it was just like this wave of like the new generation of crypto where everyone was just used to Bitcoin, and Litecoin was there from 2011. So like kind of those two were the OGs, and then you had Ethereum come into the fold, and by 2017 it was just like what can we make and how can we apply this technology, which is actually really amazing because the 2017 ICO phase kind of brings me to around 2020 where I was first creating Miss Teen Crypto, and there were Uniswap grocery store tokens like pickle token, pineapple token, like all these things popping off. And are they here now? Are a lot of them used? No. But what remained? It was DeFi and what that could bring to the table. And my question to you is, what do you think DeFi can bring to the table?
Well, it leads me into a good swing into Alvara, because what we're trying to create into the whole space is potentially a whole new type of, well, firstly, there's a couple of elements. Number one is not necessarily, it was created by as at Alvara, but it is fully open source. Anyone can code it, anyone can create it, which is the ERC 7621, which we were issued that number a couple of weeks ago. So essentially that is a, it used to be called, before we got given the official number, we called it the basket token standard, because at its core, it is a basket of tokens in the form of an NFT, where other people can collateralize and contribute Ethereum, and the owner of the basket earns fees from that. And so I'd say it's most similar to a 6551, and a 6551 is like called like a smart wallet, and it's similar, but it doesn't allow for other users to contribute. It's just a personal portfolio or a personal wallet. And so what we've done with this, and I'll run you through the demo. Add in our image. Go. I think this is a chart showing the gap between the Nasdaq and the 10-year yield, which is starting to look a little bit precarious. Let's do this one. 15 demo. You'll have to apologize if my camera shakes around. It's because I'm typing onto the laptop, which is not sturdy as a normal keyboard, and give it the ticker MTD.
Beautiful.
So we're not the first protocol to attempt to innovate in this space. There's many others trying to create crypto indexes, crypto baskets, crypto funds, whatever they want to call them. The problem that we've managed to solve is, number one, to standardize these by creating a token standard where everything can be compared on a like for like, apples for apples basis, rather than apples for pears and oranges and trying to hope that they have that consistency.
Like we do with our NFTs already, right? Like it's like a Bored Ape Yacht Club versus a Pudgy Penguin, right? Like they're all on the same standard, so we can compare them.
Yeah, exactly. So just like how OpenSea, for example, pulls through any 721 or any 1155.
Exactly.
It doesn't matter if you mint on OpenSea or you hand code it yourself. Ours is the same. So at Alvara, we're separating ourselves from the 7621 because we're building the infrastructure to facilitate its mass adoption, but we aren't gatekeeping the standard itself. And so what I'm demonstrating here is the factory contract, which allows anybody with no coding experience to come onto the platform to mint their own and become their own 7621 manager. And so you can see here that we can put in some mana.
So basically, you're just building a portfolio here, and it's like as if like, you know, this is like the Alvara fund or like the Miss Teen fund, and what we can do here is just say, here are our X amount of assets and what we hold and what we could add to this fund.
Yeah, absolutely. So this could be, you know, whatever you want. For the purposes of this, I'm just putting it as a metaverse basket, and essentially these weightings, you have a choice as like a manager. You can either actively manage this, and this is the where we believe we've solved the scalability as well, is a lot of our competitors will decide who can or can't manage one of their indexes, vaults, or whatever they want to call them. We have competitors like AstraDAO or Enzyme Finance, and they have AstraDAO, for example, has non-transferable LP tokens, so you can't scale. Enzyme limits to 12 tokens within a vault, I think they call them. We allow for full discretionary management. So as a BTS owner or 7621 owner, you can fully change at will. You can have a governance only basket. It's completely down to you, but 99.99% of the asset management industry does not ask everyone's consent before they swap something, a share or a bond. And so if you build based on, you know, an industry that doesn't exist, then you're never going to get the mass adoption. You're never going to get the institutional take up. And so there are reasons why people don't allow for discretionary only. The main reason being that you have to except people need to take responsibility for themselves.
Exactly.
Which in crypto is extremely dangerous because everybody loves to be a hero when they make the right decision. But if they make the wrong decision, can't be their fault. They must have been scammed. So what we do is essentially take the Uniswap Labs approach, or like PancakeSwap. When somebody goes to buy something on PancakeSwap that looks like a honeypot, they will tell them, this looks like a honeypot. Are you sure you want to buy this? And if you click, I am sure, and you buy it, you know, if you press a button that says, press this button and you'll get punched in the face, you can't complain if you press the button and you get punched in the face.
So what triggers the red flags for you to say that, like, it might be something that isn't worth investing in or that you should be cautious of?
So it's not anything to do with the assets. With the discretionary management, it's the information that people provide. So just like Uniswap, we're fully decentralized to a point. People like to argue that fact, but we are there to basically point out where a manager could deceive people. And so if somebody has full discretionary permissions and they provide no KYC, they provide no website, no Twitter link, no YouTube connection, you can fully connect all of your socials to give, because some people like, let's say, you know, Pentoshi, he has a Twitter account that's well followed, people trust him, but they don't know who the individual is. And so if he was to connect his Twitter, they know it is his basket, but they don't necessarily know who he is as an individual. So if people want to build, you know, Ethereum under management and earn fees, then in order to do so, logic dictates that the more information they provide, the more likely it is that they'll be able to build up contributors. And so we will issue red flags where somebody has full discretionary controls, but they haven't provided any information, because even though they can't build anything that's exploitable directly through us because they're minting a standardized token standard, once they have discretionary permission, if they do build up assets under management, they could code a honeypot on Uniswap, list it on Uniswap, and then use the basket to purchase that. And that's why it's important that we flag up where people do have those controls, because again, a lot of people try and control decentralization rather than manage it.
Yeah.
And that's where the scalability problem of our competitors falls down, is that they're doing it for the right reasons. But if you constantly have to decide who can or can't manage effectively a fund, you are literally doing the job of the regulator. And there's no way that you can be fully decentralized like Curve and like Uniswap. Curve and Uniswap, so far, they've survived any Securities Exchange Commission action. They haven't gone near them. And touch wood, but the reason why is that they are fully decentralized. And because of that, you can't make edits and you're not there deciding anything as a team. Our team exists to manage the decentralized infrastructure. And if we have to start getting involved in who can or can't do anything, then we risk, you know, we're looking after every single investor by not looking after every individual investor. We're there to manage the macro and the whole community by being decentralized enough to manage this infrastructure as completely immutable DeFi infrastructure. Because if we start getting involved as a direct team and not just a development team, then that's when we risk everyone by falling foul of the regulator. So that's the reason why we have to do it this way. But just to mint this and show you the transaction.
Can you only add Ethereum tokens to this portfolio? Can you add like anything from other blockchains as well, or just Ethereum for now?
So well, on here it's Goerli testnet, so it's just Ethereum testnet.
Okay, yeah.
At first, launching on Ethereum because, of course, if you look at the, I'll show you the actual transaction. It is an expensive gas transaction. However, we have to be led by liquidity because, in essence, if we want to scale, and it's a good objection to get, which we're getting from people now, which is that they're concerned that DEX liquidity might not keep pace with our ambitions as a protocol, because if we start attracting billions, we need you know, the swaps that are going on within the portfolio, if 10% or 30% is going into Mana and they only have DEX liquidity of you know, $1 million, and someone's got a $10 million BTS and they're doing 30%, then like that slippage and that impact on the pool will be huge.
Yeah.
So we're talking to people like Coinbase Custody, FalconX,
That's great.
Fireblocks, to try and tokenize centralized exchange liquidity, because best execution is something really, really important in traditional finance. It's enough to move provider even for like 1 basis point, like 0.1%. So, you know, it's good to get those objections, because it means that we're, you know, if they have to worry about like the whole DEX liquidity situation, then, but that's why we're launching on ETH, because ETH has the most
Liquidity.
TVL.
Yeah. It has a lot of interaction. Yeah, okay, that makes sense.
But we will be moving to other chains, because obviously, as you can see, we're, you know, calling the create BTS function on a smart contract, which is in itself swapping as per all of the underlying transactions, because every basket is fully asset backed. All of the tokens you purchase are held within it. So there's never like a bank run or never an opportunity for one, because everything is contained. It's not just a derivative or representation. And
it's real time.
At the same time as all this, the BTS itself gets minted to the wallet. So it's also minting an NFT in that transaction. So of course it's like
that's freaking awesome.
Yeah, exactly. So you can see everything
proof of fund. I love that.
Exactly. And you can see it pulls through here.
The leaderboard.
Exactly.
How
which
nice.
has all the monetization, all of the gamification of a DEX tools, CoinMarketCap, CoinGecko. And with that, anyone can contribute to anybody else's basket. And when they do so, they receive in return. There we go. So we got the cool contribute function. I mean, the main part of all of this, and where I'm so excited for Alvara and the potential that it can open up in crypto, is every single contributor, when they do give their Ethereum, they get in return, in this case, the MTD LP token, which is a fully transferable ERC20 token, which represents their allocation within your basket. And so this means that as a protocol and basket owner, you can infinitely scale and build a whole protocol around your successful basket, because you're earning 1% of the fees. You can add liquidity for your ERC20 LP token. You can build staking, derivatives, lending strategies, governance, anything that can be innovated on top of a normal token. You can innovate and build on top of your whole basket. So we have the ability for every single basket on the leaderboard, if they are successful and they're earning enough money to justify it, they can build out and manage a full investment DAO and protocol on top of our core infrastructure. So the web and like the scalability and the levels that this can go to is astronomical. It's like with Curve Finance, they spurned Convex, a top 100 token, Yearn, Stake DAO, Pickle Finance, Beefy Finance, tens of and hundreds of yield aggregators that couldn't exist without Curve's infrastructure. We have that same ability, but rather than hundreds, we have the potential for thousands or tens of thousands of individual sub-protocols, all built on top of our bottom level infrastructure, of which we are the on and off ramp for contributions to those, 0.5% in, 0.5% out. If people add liquidity as well, it means that they have a constant arbitrage opportunity between their AUM and their market cap, which again, doesn't matter if it's a bot or a human, 0.5% in, 0.5% out for our stakers. And on top of that, we have all of the revenue features of an OpenSea, because you can even sell your basket and the revenue stream to somebody else.
Really?
And we have, all of the DEX tools, all of the monetization of a CoinMarketCap, CoinGecko. So you can start a fund, manage a fund, and even sell your fund all in one place.
That's insane. So you're not tied to it, you know, if you wanted to, you know, take a break.
Yeah, and as well, if you want to, not everyone has to be an active manager. If you want to create a basket, which is the 2021 batch of like Animoca invested in liquid tokens that are live, you can create that basket as an index, and then just basically, if people like it enough, and you build up AUM, and you're earning let's say you're earning 10 for a year, you could even list that at like a price to revenue valuation of your own choosing. And if people want to purchase that revenue stream, they just need to decide for themselves, like, can I, market this, or could I build it? And the great thing is people don't need to come to this necessarily with a full business plan. They could come to it with a website, justify why they should get AUM, tell people about them. Or if they're just the good performer and the best performer, then, they will build that organically, and they can decide later on if they want to.
Wow, this is really cutting out the middleman to the top degree. And I think an idea like this and the concept that you guys are building, because why I'm saying it's just an idea right now is because this is like your foundation you're building. And like you said, this is just the beginning of what you envision people using your platform to kind of give them that groundwork, so that way they could keep going and going and going and really transform this world of DeFi and what we think finance should even look like. And I kind of like that you mentioned that you wanted to bring in centralized exchanges, but I think one question in my mind is, why would you go to a centralized exchange, one? And two, do you think they will be receptive to what you're doing? Because this is kind of like very DeFi and very far off from what they're doing right now, especially with the regulatory scrutiny, kind of how you were mentioning before.
So the reason for the centralized exchange, it's not necessarily about getting onto centralized exchanges, but more about our ambitions are not just for like crypto. So the first element of this is, getting mass adoption amongst the crypto public in general, because at the end of the day, you can get a number issued by submitting a token standard to Ethereum, like we have, but a token standard without people actually using it, is just a number.
Yeah.
So we need to, provide that infrastructure to get the mass adoption amongst sort of normal users first, with the factory contract that makes it very easy. But we want to get the 7621 to the same, adoption as the 721, where when you had like Pepsi and all of these other Web2, companies coming on to mint an NFT collection, they didn't even think about the fact it's a 721. They just minted an NFT collection. The NFT is a 721, the 721 is the NFT. And if we can get that level of mass adoption for a effective token standard for on-chain asset management, like even Larry Fink from BlackRock says tokenization of assets on the blockchain is the future.
Exactly.
And if we can get the NFT level adoption for the BTS, when all of those trillions come on chain and start tokenizing those assets, because the ERC20, standard that can fit within these, that is going to be, put into shares, bonds. We have no limitations. As long as it can be tokenized, it can be put into the 7621, which means that eventually when you do have, property portfolios, bond funds, shares, any real world asset, even looking at the 7621 as a way to essentially be like a multi-SPAC, a special purpose acquisition company that they go to market with to list on like public trading like NASDAQ. You can raise and collateralize Ethereum. And if you can tokenize like 5 private equity opportunities, you can raise all of that from the public and then go and invest into those companies. So the adaptability of the 7621 isn't just limited to crypto. So we need to make the 7621 the go-to standard, because if we're able to get that first mover advantage where, people don't even think about it, it's like us being OpenSea, but we invented the NFT at the same time.
Exactly. Yes.
So therefore, we've got to work on the big, those are the ideas, because you got to think, 5 steps ahead. And the first stage is what we're doing now, making it very, very easy for mass adoption by simplifying it to just, click and go. But really, we want to be concentrating on the future, which is stuff like best execution. And we're going to make sure that people always know if they are using centralized exchange liquidity will have like a toggle so that people can, have that option, but not going to make it a standard so that people know the additional risks. But we need to think of the long game, and that's, getting the trillions in the traditional finance industry on chain. And when they do come on, using the 7621, because if they use the 7621, then where's everyone going to be aggregated on Alvara?
I love your long-term thinking. I think that's something that's really important in crypto, is that long-term thinking, because you're not thinking about the right now. Okay, let's launch this platform. Let's make sure we put everything out right now without thinking about it first and saying, "Hey man, doesn't this have to work if we have that mainstream adoption?" That our goal is obviously to have that mainstream adoption. Can we scale? Is it going to work? And what are the problems that we may run into so that we don't have those issues for the sake of our community and the technology itself moving forward? So I really appreciate that from you. And I want to know, like, before we head out, what's your ultimate goal for yourself personally in Web3 and for Alvara and Web3? And if there are any key links or social medias that we should be visiting to find you guys?
Yeah, I mean, in terms of the goals, it is to be, if we do everything right, and there's a long list of stuff that we need to do to get there. But, if we are able to achieve our ambitions of getting the 7621 adopted by, mainstream institutions and traditional funds, and some of our backers, we've got One Spirit Blockchain Capital. They're a publicly listed company on the Canadian Stock Exchange. We've got Alpha Transform Holdings, which again has its own funds, and they were started by Michael Turpin, who did the PR for the original Ethereum ICO.
Wow.
And we focused on those sort of strategic investors because they're going to be running actual funds which currently aren't on chain through Alvara and through the 7621. So if we're able to bring on like that sort of institutional capital, then there's no reason why we can't get this protocol and get the actual Alva token, because
That's awesome.
as well as taking like the Curve infrastructure inspiration, we've also taken the governance feature, which means that if you are a institution, the longer you stake Alvara for, the more voting power you get, and with that voting power you send Alvara rewards to your BTS LP token holders, which means that everybody has more incentive to contribute to your basket, because they not only get any potential upside, but they also earn a yield just for sitting there. So the more Alvara these institutions accumulate, the more voting power they get. The more voting power they get, the more contributors they get. The more contributors, the more fees they earn. The more fees they earn, the more Alva they can purchase. And so it's this constant circle of institutional accumulation. And this happened with Curve, where you had the Curve wars, where everyone was fighting for as much VE Curve, which is the staked version, as possible, because they wanted to incentivize their pool the most. And Convex ended up winning that. But, we have everything's been designed in a way to maintain this complete meritocracy, but give people with capital an essential like way to get to the top via yield, so that everyone is still maintaining the same like performance rankings, but people can still use their capital, because at the end of the day we got to be thinking about those institutions if we want the mass adoption. So where this can go, and our ambitions are to be exactly, and constantly evolving. I still get told by other people, or think of new ways that people can build on top of this themselves, because it's just one layer up is people building one protocol on top of it, but then they could build, if they have governance, they could build their own like bribery pools, like people could build that on top of them. And so it's just it's like an onion.
It's like an onion. Just keep feeling it. Just keep feeling it. Oh my gosh, you're so funny. And I want to know, are there any key links and socials that we should be able to find you guys at? Because I want to make sure they hear it audibly on here, and then they'll find it in the description as well. But it's better when you say, so they know it's 100%.
Yeah, so it's x.com or twitter.com. And then it's just, Alvara Protocol is the handle. And then if you go onto our website again, alvaraprotocol.io, and then all of our social links will also be on there. I don't know the Telegram off the top of my head, but if you go onto
I'll have in the description.
Website and Twitter, and in the description, then yeah, it'll all be there.
Beautiful. Awesome. Thank you so much for joining me, Dom. If you guys, again,
Thanks for having me.
Of course. And if you guys, again, want to look into Alvara, links are in the description. Make sure you always do your own research and look into more possibilities of blockchain and Web3 because, like I'm talking about with Dom, this is just the beginning. Again, make sure you guys like, subscribe, and share this out with friends. Have an amazing day. And as always, stay zesty. Peace.